Good morning out there to all of our financial advisors and wealth managers on the West Coast, and good afternoon to all our friends and viewers on the East Coast. This is Ryan from the SIACharts team coming to you on March 4th, 2021 with our weekly video. So for this week, I'm going to talk about our 7th ranking asset class, which is bonds. And to do that, I'm going to use the TLT, which is the well-known iShares 20-year Treasury bond. So moving over to the charting summary area here, we could see some general information about this product. We could see the current yield is 1.48%, and we could see that there has been a downtrend in this product over the last 6 months with this line chart here. So bonds are typically viewed as a risk-off asset, somewhere that you'd move to gain some exposure to some yield, or if the equity markets have been falling. However, it's rarely talked about that bonds are a great product for investment to the long side for price appreciation. If we look here at the Dividend-Adjusted weekly chart of the TLT, we could see that if you had held this since inception around July 2002, including dividends, you'd have a overall return of 223%, which is a great return given that it is known as a risk-off asset. So I wanted to look at a golden cross trade that actually formed using some of our technical indicators 2 years ago, pretty much to the date. And I've already populated the chart for us, but I wanted to show you how we can add indicators and overlays to our charting area here. So what I've added is I've added the Bollinger Bands, and I've added two simple moving averages. I've added the 50 and I've added the 200. To change the value, you can go like that and then just click add. So coming down to the chart that I've already populated for us, this is a weekly view of the TLT. So we can see back here around January 2019, we had what's called a golden cross, where the 50 moving average moves across the 200. We had a test of that 200 and we had a bullish close above here. So if you entered the long trade right here at this confirmation candle and rode this all the way up, I populated 3 potential areas where you could have exited. So we have a pierce of the 2% Bollinger Band right here during these 2-week area, which was the high of, or I guess I should say the low of the equity markets during March of 2020 when coronavirus hit the North American markets. So we had this extreme interest in TLT. You could have exited the trade here at this pierce of the 2% Bollinger Bands. Then we had a double top form, the confirmation candle here, bearish confirmation candle. If you exited down here, you had about a 34% gain. And then as this downtrend started to form, and we had what's called a death cross, the 50 moving across the 200, you could have gotten out here at about 31% gain. So now moving forward, let's look at where TLT is at today. This is a monthly chart, so we have a nice trend line since inception, and we have a couple support lines that I've drawn here, one around about 130 and one around 120. So the 120, we can see that we bumped up against, it used to be resistance, briefly broke through, bumped up, and we broke through, based, and we broke through again, tested, and we came up. So as of today, we've had about a 24% decline in the TLT as yields have risen. But what I found interesting was over the last 4 declines, 2008, 2012, 2015, and 2016, the average of those 4 declines was about 23%. So we're sitting right at the average decline that we've seen in this product. So we have over 1,100 individual ETF and mutual fund investable products on our platform. And those products are found across 28 different reports. These are 6 of the example reports here that TLT is found in, that are run each night using our relative strength technology. So we do offer a 21-day free trial for registered financial advisors. Our contact information is displayed on the screen right now, and we would love to get in touch with you and have a conversation and see how we could best partner with you and your research process. So until next week, take care and always strive to manage your risk in the markets effectively.